Hello traders, Joseph here again. Thank you so much for joining me on another edition of my weekly video. If this is the first time that you're watching this video, I'd like to welcome you and thank you so much for tuning in. If however you're part of the few groups of people that have been or that are familiar with what I do on a weekly basis with this video, then I want to say thank you as well, because the feedback I've been receiving from you guys in the last few weeks has been absolutely amazing, and thank you so much for the support. And obviously I'll try and try my best to keep making videos like this, because I think it's helping a few traders out there who are just starting out on their trading career. So anyway, this is actually the second video that I'm making today. I've had to redo the first one because when I posted the first one on YouTube, someone messaged me telling me the sound wasn't working, so obviously I had to take it down. So sorry about that, guys. I'm gonna have to do it again. So let's head over to the charts. I've actually got a couple of trading opportunity that I want to show you guys on the charts. So let's head over to the charts. So the first trading opportunity that I want to show you guys is on the New Zealand dollar against the US dollar. So I'm actually going to take this over to the daily chart. We've got a potential bullish Gartley pattern that's hasn't yet completed, but it's something that obviously heading into the following this week of trading, it's something that it's good to keep an eye on. So I'm going to bring in my Fibonacci ratio, bring in X to A leg. For the Gartley pattern, obviously I'm looking at the 618 retracement, so we can see that the market came into the 618 retracement. So I'm going to bring in my triangle, X to A leg and A to B leg. And for a Gartley pattern, obviously to get the entry point, we're looking at the 127 extension of the A to B leg. So A to B leg, I'm looking at the 127 extension. That's going to be our entry point. So B to C, C to D. So our entry point is going to come in around 6300, which is a nice even round number. And as we can see that the market is going to come, this Gartley pattern will complete near a structure as well, structure support, because we had a double bottom right here and then the market rallied. So I'm expecting this to act like this should be a very good support once the market comes back down into that level. And so let me just bring in my RSI to try and see if we can see any sort of weakness on the RSI, because that will give us extra confirmation as well. So we can see that the market is already the RSI is already showing signs of weakness, but it's not yet oversold. So obviously I would expect this market to keep pressing back down into this level, and hopefully we're going to get an oversold condition or bullish divergence on the RSI, and that will give us an extra bit of confirmation to go long on this Gartley pattern. And in terms of target, I'm going to go ahead and bring my Fibonacci ratio and draw from A to D leg, and I'm looking at the 382 retracement for the first target. So I'm going to go ahead and bring in my tab. That should have been red, green, sorry. So yeah, bring in my, so you can see the 382 retracement coming at the 65.32s. So that's about 230 pips target on this trade. I mean, this is a huge trade simply because I'm doing this analysis on a daily chart. So it's not really a short-term trade. It's a long-term trade. And for a target, for a second target, looking at the 618 retracement, that's coming at the 666.68. So that's further. Altogether is about 370 pips on this target. So our stop loss is going to have to be huge on this trade, because it's a daily chart, and the fact that our stop loss has to go below this structure level right here. So yeah, if we're looking at our stop loss, it's gonna have to go below this structure level, so below 62.40s. I mean, unfortunately it's gonna have to be more than 100 pips to be realistic on this trade. The stop loss has to go down at least 150 pips. So I mean, if this the pip range fits your trading strategy, then by all means, this is a good trading opportunity for you guys to watch out for. And the next pair I'm going to be talking about is actually the euro against the Swissy. So let me head over to that chart right now. I'm going to show you guys the trade setup on that currency pair as well. So we've actually got a bearish Gartley. So let me just bring in my Fibonacci ratio, X to A leg, and we got a 618 retracement. So this is just the complete opposite of the one we just saw on the New Zealand dollar against this. The US dollar. So we got the X to A leg, we got a 618 retracement. For our entry point, we're looking at the 127 extension of the A to B leg. So there you go. and we can see that the market has actually come in. It hasn't, we haven't quite touched that the 127 extension. So the completion of this Gartley pattern is coming in round about, it's near the 101, which is another important round level, a nice round level for us to get involved. So we can see that the market hasn't quite, it's not quite there, and I would expect this market to rally up until that point. And in terms of this being a good trade setups for a lot of people, this is so much better than the New Zealand dollar against the US dollar, simply because of the pip range on this one. Because in terms of target, our first target, we're looking at the 382 retracement, and we can see that's just about 100 pips from our entry point. So obviously our stop loss is not going to be more than 100 pips really. On our second target, the 618 retracement, coming in about 108 pips. So in terms of a better trade setup, this is it's not really a better trade setup, but it's a better trade for those of you who have got like obviously if your pip range is less than 100 pips, which is what I usually do. I don't really take trades, if they got more than 100 pip stop loss. So this is actually a trade that I would be interested in, and yeah, so I'll just keep an eye on this one. Yeah, so the next currency pair that I actually want to talk about is the euro dollar, and unfortunately on that one we had a cipher pattern that completed on Friday, but obviously I didn't trade it because I wasn't trading. I didn't trade on Friday last week, but we had a cipher pattern that completed, and well, let me show you guys what I'm expecting this market to do, and the kind of opportunity that I'll be looking for in this market. So let me just go ahead and draw the cipher pattern for you guys. So as you can see, we got the X to A leg, we got the 618 retracement. Obviously for a cipher pattern, it has to be between 382 and the 618 retracement. It must not touch the 786 retracement. So we got the 618 retracement right there, and we got the 127 extension. So let me go ahead and complete the cipher pattern triangle. X to A, A to B, B to C, and the cipher pattern is going to complete at the 786 retracement. So let me just extend this, so we can see that the market, yeah, that's just coming in right at that point. So the market did touch that level on Friday. So now the question is, if you have missed this trade, what are you likely, what is the best possible scenario if you still want to get involved? So let me show you guys what I'm going to be watching. So if I go ahead and draw in my Fibonacci retracement, so in terms of targets, we can see that the first target on this trade is going to come in the 382 retracement, which is around 108.83. That's where the first target is going to be. So we can see that the market hasn't quite touched that. Let me just complete this and then I'll talk to you about it. So that's the second target. So we can see that the market hasn't quite touched that first target. So if the monster market open, this week, if by any chance this market comes back up to this level before hitting our first target, then it's going to be a trade that I'll be looking to get involved. But if, however, this market continues to go down, unless it hits the first target before reversing back up, then it's a trade I'm going to be staying out of. So that's something for you guys to watch out for. If we don't hit the 382 retracement, if the market comes back up to anywhere around that cipher pattern completion, then I would be looking to get short, because this market, as we can see, the market has come into a little bit of a sideways movement right here, and it's approaching the top end of that channel. And I think it was on this euro dollar that we had a lot of advanced patterns setting up during last week. I think I posted about 4 different advanced patterns that all ended up being winners on the euro dollar. So yeah, so certainly because the market is in a sideways channel, that's why we've seen a lot of these patterns. So yeah, this is something I'll definitely be looking for as we head into the next week of trading. So just to give you an idea what your stop loss is going to be. Oops. It's going to have to obviously go above X. So yeah, I'll be looking to put my stop loss around 101.87. So it's not that huge. It's about about 90 pips stop loss on that one. So yeah, I think that's it for now, guys. I've got 3 different setups I'm going to be watching, and yeah, so I mean, if you're following me on TradingView, I'm probably going to be posting a lot more trades like during the week on the lower time frames. So if you want to be updated on the trades that I place during the week, then you should make sure you follow me on TradingView. The link is at the bottom of this page, and yeah, I think that's it for now. So thank you so much, guys, for watching it, and if you like what you see, then leave a comment, share it, or subscribe, or anything that helps really. And yeah, so until next time, just keep it simple, and I'll talk to you soon.